All right, let's dive in. Today, we are going to unpack a huge economic puzzle that's really defining 2025. See, on the one hand, you've got all these signs of a booming US economy, but on the other, there's a wave of companies failing at a rate we haven't seen in more than a decade. So let's get right to the heart of what's really going on. 717. I want you to just let that number sink in for a second. In a moment, you're going to understand exactly how this one figure pulls back the curtain on a hidden crisis in the American economy. So what does that number mean? Well, according to S&P Global, that's how many US companies filed for bankruptcy in just the first 11 months of this year. And this isn't just some small blip, you guys. It's the highest level we've seen in 15 years. That's a sign that something big, something profound is happening that the headline numbers just aren't showing us. Okay, so how are we going to break this all down? First, we're going to look at just how big this bankruptcy wave really is. Then we'll get into the anatomy of this, well, this perfect storm that's causing it. We'll pinpoint the industries getting hit the hardest, tackle that bizarre paradox of economic growth, and finally figure out what it all means for our divided economy. Okay, first up, let's really get our heads around the scale of this crisis. We've got to put that big number into perspective to really understand what businesses are up against. So we've got those 717 filings in just 11 months. That's a huge 14% jump from 2024. This isn't just a statistical fluke, folks. S&P Global's data shows this is a clear and frankly accelerating trend. It's pointing to some serious stress under the hood of the corporate world. So the big question is, why? What's going on here? Well, economists and business leaders are all saying pretty much the same thing. It's not just one problem. It's a bunch of different pressures all hitting at once, creating what's being called a perfect storm for American businesses. And this storm, it's got four main ingredients. You've got trade tariffs jacking up the cost of materials. You've got supply chains that are still a mess, creating constant chaos. Then you have high interest rates just squeezing the life out of companies with debt. And to top it all off, regular folks are pulling back their spending, which just kills profit margins. Let's just zero in on that first factor for a second, the tariffs, because it's a huge piece of the puzzle. Just look at this chart. The average tariff rate has shot up from a manageable 2.5% to, what is that, a staggering 17%? I mean, if your business depends on anything from overseas, that's not just an increase, that's an existential threat to your bottom line. Right, so this storm, it didn't hit the whole country evenly. Let's dig into where it really made landfall, because some industries were just way more exposed, and honestly, they were the first to go down. Take a look here. The industrial sector, think manufacturing, got slammed by those import tariffs, and boom, 70,000 jobs gone. Then you've got consumer goods, furniture, clothes, stuff like that. As regular families started prioritizing essentials, spending on those items just dried up. And you might be surprised, even the renewable energy sector got hit, facing a brand new 20% tariff on solar cells from overseas. And listen, this is really important. We're not just talking about mom and pop shops here. We've seen a huge spike in what are called mega bankruptcies. These are failures of massive corporations, companies with over $1 billion in assets. We are absolutely talking about household names. I mean, look at this list. Spirit Airlines filed for bankruptcy for the second time in less than a year, just crushed by debt. Claire's, the accessory store, crippled because it couldn't get its products from Asia. And Posigen, a huge name in solar energy, got completely pushed over the edge by these new trade policies. And if you want to hear it straight from the horse's mouth, you don't have to look any further than this quote from Posigen. When they filed for bankruptcy, they said, and I'm quoting here, that trade policies had raised the cost of their solar panels by 400%. 400%. I mean, come on, what business can survive that? And this is where things get really weird. All this pain, all these companies going under, it's all happening while the main economic numbers, well, they look fantastic. This is the core contradiction we absolutely have to get our heads around. Okay, look at this number, 4.3%. That was the official GDP growth rate for the third quarter of 2025. By any normal measure, that's a booming economy. It seems to completely contradict everything we've just talked about, right? So that's the billion-dollar question, isn't it? How can both of these things be true? How can we have record-breaking growth and a record-breaking wave of bankruptcies all at the same time? The answer?
it turns out, reveals a massive split running right down the middle of the American economy.
Here's the key. We're not actually looking at one single economy anymore. It's more like two. You have the official story, the one told by big, shiny numbers like that 4.3% GDP growth. And then you have the hidden reality, which is a full-blown crisis for the small and medium-sized businesses that are supposed to be the backbone of the economy. They're just getting crushed by all this structural pressure. All right, so for our last section, let's break this down. To really solve this paradox, we have to ask a pretty fundamental question. If the economy is growing, who is it actually growing for? This is the big idea right here, what experts are calling the divided economy. It's a situation where the overall growth number you see on the news is being driven entirely by a tiny, very specific slice of the economy. And the growth in that one area is so powerful that it completely hides the fact that almost everyone else is struggling. So what are these engines of growth? Well, it really boils down to two things. First, you've got continued, heavy spending by wealthy consumers. They're just not feeling the same economic pinch as everyone else. And second, and this is a big one, you have massive corporate investment in artificial intelligence, mostly by just a handful of tech giants. All that spending on AI counts as a huge capital expenditure, which directly pumps up that GDP number. These two things all by themselves are strong enough to drag the entire average up. And that, right there, is the main takeaway. The headline numbers look great, but they're telling a very misleading story. The broad base of the economy, we're talking about the thousands of small and medium-sized businesses that employ millions of Americans, is in deep, deep trouble, even while a very select few at the top are doing better than ever. So that leaves us with one final, really critical question to chew on. In an economy that's this divided, the next time you hear that the economy is growing, you have to stop and ask yourself, who is it really growing for?